Good morning, ladies and gentlemen, and thank you for attending this virtual meeting. I'm pleased to welcome you on behalf of Kilburn Engineering Limited and SKP Securities to Kilburn Engineering's Q2 FY26 and H1 FY26 earnings webinar. We have with us Mr. Ranjit Lala, Managing Director, Mr. Mitanshu Khaitan, Director, Mr. Sachin Vijayakar, Chief Financial Officer, Mr. K. Vijay Shankar, Mr. K. Vijay Shankar Karta, Managing Director, and Mr. Managing Director, ME Energy Private Limited, and Mr. Amol Monga, Whole-time Director, Monga Straightfield Private Limited. Friends, this virtual meeting is being recorded for compliance reasons, and during the course of this discussion, there may be certain forward-looking statements. These must be viewed in conjunction with the risks that the company faces. We'll have the opening remarks from Mr. Lala, followed by Q&A session. Thank you, and over to you, Mr. Lala.
Thank you, Naveen. Good morning, everybody. A warm welcome to all to the Q2 2026 earnings call and latest updates on the company and its subsidiaries. In continuation of strong operational and financial performance in Q2, and its subsidiaries have delivered another round of performance. A brief on the financials is as follows. Kilburn had a top line of 114.79 crores for the quarter, with an EBITDA of 26.39. This was a year-on-year growth of around 47% on top line and 48% on EBITDA margin. On a consolidated basis, we achieved a top line of 154 crores with an EBITDA of around 27%. As a group, we closed the Q2 with an order backlog of around 492 crores, and additionally, we have received orders or LOIs aggregating to 129 crores from 1st October till date, aggregating to an unexecuted order pipeline of around 600 crores. For the current financial year, we continue to have an inquiry pipeline of 4,000 crores at group level, indicating a good traction across various sectors. We continue to maintain target of 50% growth in top line over the last year, which is approximately 650 crores. The current margin profile looks sustainable, and we expect to close the year with an EBITDA in the range of 26%. This, of course, is a result of a mix of orders and the scale of execution. With this, I hand over back to Naveen. Thank you. Naveen, are you there?
Thank you, Mr. Lala. Friends, we now open the floor for the Q&A session. Anyone wishing to ask a question, request you to raise your hand. We'll unmute you and take your question. Just wait for a minute for lining up a few questions. We'll take the first question from Dinesh Kulkarni. Dinesh, please go ahead.
Sir, am I audible?
Yes, you are. Please go ahead.
Okay, sir. First of all, congratulations on a really great set of numbers, sir. And we look forward we're definitely looking forward for such these kind of numbers, and we expect the company to continue on this path. My question is, sir, we have seen this 50% growth, but do we expect it to continue for over the next 2-3 years? What is the medium-term outlook we can expect after consolidation?
Sure. So next 2 to 3 years, we expect a growth of around 25% CAGR. We are quite confident of that. And the EBITDA expected would be in the range of, again, 23 to 25%.
Okay, that's really great, sir. And what about CapEx, sir? Like for this year and next year?
So we had planned a CapEx of 25 crores for the brownfield expansion at Saravli. I think this was mentioned earlier. So we are very much focused on that, and we expect the expansion to complete by end of Q2 of next financial year. We are also planning a capex of around 10 to 15 crores at ME Energy Saravali, which would probably be commenced somewhere in the end of next quarter.
Okay, that's really great, sir. I'll come back into the queue for if I have any question. Thank you.
Sure. Thank you.
Thank you, Dinesh. We'll take the next question from Khush. Khush, please go ahead.
Am I audible, sir?
Yes, Khush.
Yes, you are. Please go ahead.
Sorry for the delay. Congratulations on a great set of numbers, sir. I just had a query on the increase in receivables. I think it's increased by around 75 crores. I just wanted some details on that. Thank you.
Yeah, my colleague Sachin will answer on that.
Yeah, good morning. See, this last quarter we have physically dispatched around 142 crores. In the last month, that is in the month of September, in fact, we dispatched around 94 crores. That money will come subsequently. That is the reason for the increase in the debtors. There's a very high number of physical dispatches which we have done. Correspondingly, in the last March quarter, we had done just 54 crores of physical dispatches. Against that, we have done around 142 crores. Hence the increase in this receivables. So this money will subsequently come in the next coming quarter.
Right, sir. And I also noticed in the new contract which you won a couple of days back, there's also a nuclear portion, I think. Is there more growth, expected in that area?
Well, we have a couple of inquiries in the nuclear vertical, which we expect to close in next, I would say, few months. It would take some time, 2 to 3 months, hopefully.
Okay, right. Thank you so much. Sir.
We have already, received a couple of quarters back.
Right, sir. Thank you so much, sir.
Thank you.
All the best.
Thank you, Khush. We'll take the next question from Naman Bhansali. Naman, please go ahead. Naman, please unmute yourself and go ahead. I think he's having some problem. We'll take the next question from Shailaditya. Shailaditya, please go ahead. I've unmuted you. Please go ahead and ask your question. We'll take the next question from Maitri. Maitri, please go ahead.
Naveen, I guess the participants are unable to unmute themselves.
Yeah, but I've already given them the rights to go ahead. Just give me a second, please. Naman, can you unmute yourself and go ask your question, please? Naman, are you able to unmute yourself? Can we move on to the next participant?
I think the unmute option is disabled.
Yeah, but they've been given the rights to go ahead and ask. Tejas, please go ahead and ask your question.
Hi, am I audible?
Yes, you are loud and clear.
Yeah, thank you. So congratulations on the good set of numbers, Mr. Lala and the team.
Thank you.
Yeah, one question, the cash flow has increased, the negative, I mean, still negative and has increased. Is it only because on the account of the late dispatches or something else?
Yeah, principally it is on account of increase in the sales, dispatches, debtors, that is debtor level,
Yeah.
which money will subsequently be received. Also, we have paid our creditors also, as well as increase in payment of advances also, which has led to this increase. But now with this money is expected in the next 2 months, whatever we are dispatching, so that will definitely improve our cash position.
But even the creditors amount has increased, right? Despite paying some advances.
Yeah, advances we have paid to creditors. That is what I'm saying. Advance to creditors, I'm saying that also has increased.
Oh.
Yeah.
And are we getting any advances from any of our clients for any of these jobs that we're doing apart from the
Yeah,
monochrome?
we are getting, but that is only 10 to 15%.
Okay.
So as compared to the amount of dispatch, that is lesser. That is why this increases appearing here. Okay.
And Mr. Lala, you mentioned that your like previous calls you were maintaining that the EBITDA would be in the range of 2021. Today you are saying that it looks like we will be able to sustain this 25-26%. So so do you think that even, I mean, I understand for the next year you've already given a guidance in 24-26. So is this an account of better product mix or higher technology product mix, or are you seeing some benefits because of some raw material or maybe some financials that we've been paying in advance and getting the cost down? So if you can just throw some light on that.
Primarily, I would say that two reasons have contributed. One is the scale of operations, and second is the mix of the orders that we have executed.
Okay, so sir, operating leverage is what kicking in this.
And
Yep.
what I've mentioned, around 26% would be for the current year, and next year I would expect it to be in the range of 25%.
Okay. Thank you so much, sir. That's all.
We will definitely apprise you from time to time.
Okay, sir. Thank you so much, sir.
Thank you.
We'll take the next question from Andre Purushottam. Please unmute yourself and go ahead.
Can you hear me now?
Yes, we can. Please go ahead.
Thank you. Thank you. I had a couple of questions. The first is a bit of an accounting question. Your tax over whether you compare half year or quarterly, that has gone up, right? So which is why your PAT has not grown as sharply as your PBT and EBIT. So could you just explain what was the reason behind that?
Last year we had carry forward losses which got used up by September. That is why we had to less tax outgo last year. So now those tax carry forward losses are over. So we have to pay tax now, full of on the entire profit. Yeah, that is the reason the tax is higher.
So the current incidence of tax is what we should use as projections going forward. Is that what you're saying?
Correct. The normal tax rate of 25-27%. That should what you should consider for.
My second question was on exports. I think Mr. Khaitan had said in some commentary that you have a possible export market to the tune of $2 to $3 billion, right? Now, if you, what is the really addressable market here? The $2-3 billion may be a theoretical kind of potential, but if you were to break it down to the territories that you can serve, or the products that you can serve, or the markets that you can serve, what should we take as an addressable market? And over a period of time, can we say that we are targeting a certain market share? In which case, what could that market share of this addressable market be in terms of additional, moolah or this thing that can come into the bottom line?
So, Andre, this market size which we are talking about of $2 to $3 billion, there's no fixed data on this. This is a global estimate. If you see, the idea of highlighting the size of the market is to show that Kilburn is relatively still very small in terms of what the global opportunity showcases us. The reason being, a lot of markets, especially the developed markets, were not open to manufacturing by developing countries like India. But that gradually is now changing, and the acceptance of Indian manufactured goods is gaining traction. We do have technology tie-ups which we have got with Nara from Japan. Recently, we've done a technology tie-up with Comline, which is a US-based dryer company. So with our in-house manufacturing expertise and knowledge, as well as technology tie-up, it is going to open up more opportunities in various geographies. Uh, it is very difficult to quantify, and it would not be right to aim for a market share, but we can highlight the point that Kilburn export share will go up. Earlier, it used to be around 15% of revenue. We believe this can now be 30 to 40% of the revenue. We have focus on the domestic market, but we are now focusing as well on tapping the export market, where till history shows us we were only focused on repeat customers or relations which have been there historically with the company. But our recent entry into JESA at Morocco for OCP, our entry into a fluoride company in Korea, these are opportunities which are now coming our way. So the basic idea is that we need to scale up our export focus and thereby help in growing our top line. So when we are guiding for 20-25% top line growth on an organic manner, we will need the export opportunities to fructify to help us achieve that kind of pace going forward on a higher base.
Okay. The third thing I wanted to ask is, firstly, I wanted to congratulate you on a great set of numbers.
Can you speak up a bit loudly? Your voice is a bit low.
I wanted to congratulate you on a very good set of numbers. And in that context, I also appreciate the fact that you've generally been conservative in your forecasts, and you have delivered more than you have promised. That's a very nice sign. Now, when we met last in an investor conference, Mr. Khaitan, you had given a guidance of about 40% growth top line for the year. Now you have already achieved 50% growth, right, in the first half. So does that mean, how should I see the second half in terms of, should I say that, you'll still stick to your 40% guideline? In which case,
so actually we had upped our guidance to 50% for the full year. We believe we should achieve the 50% top line growth with an upward bias. Since we already have a 600 crore pending order book, at least 50% of that should get executed in the second half of the year, along with some part of new orders which we expect to get in the next few months. So I think 50% top line, so we should comfortably achieve. How much more will depend on customers, dispatches. Being a project-led business, there are times when our order can spill over from one quarter to the other. But I think 50% is something we are comfortable with for the current year.
And the pattern of Concall growth being higher than standalone growth will continue?
The consolidated growth this year will be higher purely because Monga Strayfield was acquired in the month of February. So that is getting added in every quarter. Recently, ME Energy has also got some large orders with our entry into the ferroalloy market. I think that's a very big breakthrough for ME Energy and for Kilburn as a whole, because in India, waste heat recovery systems for ferroalloy has not been very prevalent. So with us entering this segment, this will open up a large market for us. And if ME Energy sees rapid growth, automatically the consolidated numbers will see a higher percentage growth in the coming quarter.
And one last query, are you planning to get listed on the NSE?
So we are in the process for NSE listing. It's not possible for us to give a timeline, but the board has approved the company to apply for NSE listing.
Thank you very much and congratulations once again.
Thank you.
Thank you.
Thank you, Andre. We'll take the next question from Sagar Shah. Sagar, please go ahead. And I guess he's also having some issue. Samarth Khandelwal, please go ahead.
Am I audible now?
Yes, Sagar, you
Yes,
are.
you are.
So, first of all, congratulations, sir, for delivering such numbers in such period, in really, especially in this uncertain period, actually. So Kilburn has definitely been an exceptional performer actually in these times. Now, my first question, sir, was related to the industry size that you referred to, the $2 to $3 billion that you referred to actually. Now, what I want to understand, even in domestic level as well as on the global level, what has been the key driver for actually Kilburn to get such healthy orders and to from diversified industries also? So, is it related to some weak competition, or is it related to our you can say increasing bouquet of products that every year we have just introduced kept on introducing new products in the market? So what has been the key drivers, especially for you? That is my first question, sir.
So I would say that one of the key drivers has definitely been the Make in India concept. That has definitely, provided a lot of traction, especially for the exports. When it comes to the equipment, I think we are offering the same equipment but more as a solution. So earlier, probably when we were offering rotary dryers, we were not offering the peripherals, and this is something which we have been doing for last 2 to 3 years. And we've been looking at various applications and new applications, like metal recovery was one of them. Then we are trying to look something in the cement market. So we are exploring all these verticals, and wherever we find opportunities, we definitely bid for it. So there are multiple reasons, why we have been growing. Yeah.
Mm.
We
So
also look.
basically, yes, yes. Sorry, sir. Can continue.
We also looking at supplying equipment to our collaborators. Yeah, if they want to manufacture it in India, we take orders from them as well. So there are multiple.
Okay, okay. So basically, what can I assume is that because of the competition that is actually focusing on maybe one or two or three products, as compared to we are actually offering some multiple products and we are aiming some different applications. That has been the key driver, which the competition is not. Is it safe to assume, even globally, you're saying?
Well, definitely for the Indian market, I would say that is relevant, what you mentioned.
Hmm.
Globally, again, if you look at Europe, I think overall the manufacturing over there has gone down. And we have a couple of American companies who are active in North America and Canada. Yeah. And
Hmm.
I think the Chinese have definitely uh, lost the market to the Indian manufacturers.
Okay, okay. So very rare to listen, sir, actually, but good to hear that. But my second question, sir, was related to ME Energy. ME Energy, finally, we have actually the goal that you had around when you had acquired around, I think so, 18 months back. So finally, the goal behind the diversification for ME Energy into getting higher products that you just mentioned in the PPT also, that you are getting an EPC contract in the ferroalloys you just mentioned to the previous participant, and also you have secured a major EPC contract. Also, you have your trial shipment to Morocco. So basically, is it fair to assume that ME Energy definitely is on track and to deliver and to sustain such high growth in revenues actually above 100 crores? And can we see with the phase two expansion on track, can we see further growth in FY27?
So, if I can address the question on energy, so ME Energy has the technology, has the expertise, has the management to do much larger contracts. Before we took over the company, they had working capital issues, they had issues with cash flow. So they were not able to do large orders. They did not have the credibility or financial backing for customers to give large orders to them. With
Right,
Kilburn
sir.
acquiring ME Energy, two things have happened. One, they are part of a larger group. The credibility of them executing large value projects is uh, a certain, not from an expertise point of view, but from a financial background point of view, that they will be able to execute it. Plus, because of our network at a group level, we are able to open doors for ME Energy to approach many more corporates, both private and public, as well as open export opportunities for them. With all this happening, the market size addressable for ME Energy is very large. Again, ME Energy at 100 crores is just a small fish in the ocean. So we don't want to give any growth numbers honestly for ME Energy, but as I mentioned earlier, ME Energy can be a driver for high growth. Their order booking is over 150 crores till October, which is a record order booking for them. This will automatically ensure that top line goes above 100 crores. But I think if they are able to win 2 or 3 more large orders, then for ME Energy to look at doubling their turnover in the next 12 to 18 months or 24 months will not be such a big challenge because they are working from a very small base.
Yes, sir.
We are also looking at ME Energy as a factory, the ME Energy factory as a second factory for Kilburn Engineering. So a lot of job work of Kilburn Engineering will also be executed in the ME Energy factory in Pune. So when you look at our numbers, you will have to always look at our consolidated numbers because there could be times or a quarter where certain turnover comes in ME Energy and not in Kilburn, or sometimes some orders are won in Kilburn but executed by ME Energy. So it's always better to look at a consolidated picture because we are using the ME Energy facility also as a third facility for Kilburn Engineering. And the capex which is happening in ME Energy, that will increase their capacity to also cater to over 300 to 400 crores when 40% of that is bought out. So combined output for Kilburn now with whatever capex we are planning, we are very comfortable to scaling up over 1,000 crores from a capacity point of view.
Okay. So phase two is on track, sir. Expansion for ME, the second factory that you just mentioned.
For ME, we have not yet commenced. We'll commence
Okay.
for the last quarter. For
Okay.
Kilburn, we are in the process of obtaining approvals from various local bodies and MIDC, and we expect that this would get completed by Q2, end of Q2 next year.
Okay. Suppose that we'll start recurring revenues for the phase two expansion. You'll get some additional space from Q2 basically.
Definitely.
Okay. My last two questions was on the data keeping, sir. What is the utilization in each of our plant? Can you, if you just can mention right from Saravali plant to this Ambernath plant, ME and Monga? And the second data related questions was order. Can you just give the order breakup of this each of the subsidiaries, ME and Monga actually?
As far as the utilization is concerned, I would say that for ME Energy and Kilburn, it would be in the range of 90 to 95%. Yeah.
Okay.
For Monga, I would request Amol Monga to come in and answer. As far as the order breakup is concerned, I would suggest that you look, more at the group level rather than, individual company levels. But we, when you look at this current 600 crores, I think the total unexecuted order with ME Energy would be around 180 crores or something. And then Monga, I would not recall the numbers. But I would suggest that you consider the order intake more at a group level, which is now 610 crores open orders.
Okay.
Amol, can you answer the question on the current utilization of the factory?
Yeah, hi. At Staples, we have two verticals. So the utilization of factory A, which is on sheet metal, is close to 90%, I would say. And factory B is also close to 90%. So both verticals are close to 90%. We have an order book that is keeping us busy for the next quarter, and we are actually chasing our production teams to fulfill all the orders that we have already backed.
Okay, so just my last question, sir. So what will be if the utilization is 90 to 95% for Kilburn, including the Ambernath plant, 90% for ME, Monga is getting on track. So what will be the means where will we get the FY27 growth numbers, sir? How will we get?
So as I mentioned, as Mr. Lala also mentioned, we are undergoing a brownfield capex in Kilburn, as well as phase 2 of ME Energy. With all this together, we are comfortable for whatever growth targets we have set for FY27 as well.
Okay. Okay. Fine, sir. Thank you so much and all the best, sir.
Thank you.
Thank you.
Thank you, Sagar. We'll take the next question from Samarth Khandelwal. Samarth, please go ahead. Samarth, please unmute yourself and go ahead.
Yeah, am I audible?
Yes, you are. Please go ahead.
Am I audible now?
Yes, Samarth.
Yes,
So,
yes. Samarth,
thank you
please
for
go
the
ahead.
opportunity. Congratulations on a very yes.
Samarth, we've lost you.
Samarth, we can't hear you.
Audible now? Am I audible? Am I?
You're
Hello.
audible in pieces. Your voice is breaking.
I think yeah, yes. So the track my question is on could you share some color on traction that you're seeing from which sectors specifically?
So we have
Was
seen.
that audible?
Yeah, that's fine. I heard your question. I'll answer it, Samarth. So based on the current inquiry pipeline, I can say that we are having a good traction in the chemical vertical, then fertilizers, nuclear, metal recovery, and for Monga, I would say food. So these are the sectors where we are seeing good traction.
Okay. Sir, based on the order inflows in the current year, do we expect the subsidiaries to uh, uh, perform better than the base business? Would that be a fair assumption?
I don't think you need to look at it from that point of view. The way the order book is there today, I think Kilburn standalone will be seeing very strong growth as well. ME Energy itself obviously will see very strong growth in the second half because they have received certain orders in the month of September and October, which would be executed over the next 12 months. So next 4 quarters, you should see ME Energy delivering strong growth numbers. All this put together is what is giving us the confidence on the consolidated numbers we are talking about. Regarding Munga Strayfield, their business is fairly profitable. They are also seeing top line growth, but they are also seeing very strong bottom line growth. And that is why you are seeing at a consolidated level, we've seen strong margin expansion because the subsidiaries were clocking lower margins earlier. Now they are coming to the standalone company margin level. So automatically the blended margins are looking stronger.
See, sir, lastly, my what would are we expecting?
Samarth, your voice was not clear.
Samarth, you're not audible.
So my final question was about FY27 order inflow guidance, if you could help that.
So we are not, we don't give any order inflow guidance for coming years. We have only highlighted that we have a strong inquiry pipeline of 4,000 crores. So we believe we should have a decent level of conversion from there. But we refrain from giving any order intake guidance.
Samarth, if you're speaking, we can't hear
Thank
you.
Yes, that is all. Thank you for the opportunity.
Thank you, Samarth. We'll take the next question from Prasad Manivan. Prasad, please go ahead.
Hi, sir. Good morning. Congratulations on the great set of number. Your leadership team is really rocking the market for sure on these tough times. Sir, I have a couple of questions. So we are just speaking on 30 to 40 percentage of export market, right? Moving forward, where we will be increasing our export market. So in if we are increasing, so since we are facing the uncertain everywhere on the tariff war, so are we well balanced to handle the tariffs, sir? Can you just give some color on it?
So as of now, I don't think really tariffs have impacted our order intake because orders seem to be flowing into Kilburn, into our subsidiary. And as far as the uncertain times are concerned, I think somewhere or the other, India is getting into these agreements with different countries, with different regions. And if that continues, I don't see any reason why there should be a big challenge. Unless
Fair
there's
enough, sir.
so by and large
Got
things are.
got you, sir. So just we are having the order inquiries of 4,000 crore, right, sir? So it is some kind of, can you just give out of this 400, what would be the percentage of rational that can be converted, sir?
So the inquiry pipeline, which is around 4,000 crores. So if you look at historical data, we have been successful in a conversion rate of around 20 to 25%.
Fair enough, sir. And can we expect this 20 to 25% conversion within 12 months time the frame?
Well, typically the gestation period, I would say, is around 7 to 12 months from case to case. So definitely we can expect a conversion over next 12 months. But you have to appreciate that it's a continuous process.
Got you, sir. Got you. And we are just running out of capacity utilization of 90 to 95 percentage. So we have just guided 650 crore for FY26, and from 650 we are just targeting 25 percentage of growth run rate for FY27. So it is possible to achieve nearly 750 to 800 crore of top line for FY27. Just concerning we are already on 90 to 95 percentage of utilization, and I do understand we have the capex which will be giving uh, added to the revenue, but are we well on track to achieve the FY27 guidance, sir?
So, if I can address a question on capacity utilization, that does not give a very clear picture. You are today at 90% because there are certain orders which have come in a certain month and the plant is busy executing it. But we were not at 90%, say, in the month of April or May. So these things keep changing. So today we are fairly confident that we have adequate capacity and whatever the management has planned to achieve the numbers which we have guided for. Uh, Today, out of our total turnover, 30 to 40% is also outsourced or bought outs which come in, because now we are giving solutions. We are not only doing manufacturing inside our plant. So we do not see any major concern in achieving those numbers going forward. Regarding Munga's Chayfield, they have already uh, worked on certain expansion plans to debottleneck their plants. That also would go into play in the next 6 months. So we are fairly comfortable across our three companies.
Great, sir. One last question, sir. So just I could look up borrowing has been increased from short-term borrowing has increased from 27 crores to 40 crores. So can is there any kind of moving forward we are just on track to repay the borrowings, and I'm just following and I'm staying invested for past 2 years, and previously we have just stated like we'll be debt free company moving forward, so just need the color on it, sir.
So actually, our term debt has not gone up. Our term debt has gone down. When we had guided for becoming debt free, at that time the acquisitions were not planned. Uh, if you appreciate, we've done 2 acquisitions. We've grown our top line nearly 3 times in the last 4 years, and our term debt has actually gone down. So we are virtually net debt zero. We have cash balance. We have fixed deposit. I think the short-term debt, if you look at it on the standalone balance sheet, has gone up purely because Monga Stayfield, which is our subsidiary, was sitting on cash, and we took that as a short-term loan into Kilburn's books. But if you look at a consolidated level, I don't think our debt levels have changed much. Some level has gone up because of working capital requirements, which is justified for the kind of growth and scale we are operating at. Sachin, if you want to add anything, please.
Yeah, this is because we have taken some ICDs, means cash lying with Monga has been taken by us. Additionally, we have entered into agreement with this Receivables Exchange of India for discounting of vendors' bills. So that is why payables are reduced and this particular figure has increased. So instead of directly paying our vendors, we are paying through this Receivable Exchange of India. This is basically facilitating payments to MSMEs. So that is the reason it has gone up.
Thank you much, sir. And all the best for your future, sir. Thanks a lot.
Thank you. Mridanshu, can we take some questions on the chat board?
Sure.
I'll just start taking them. There are a whole lot of them. The guidance of over 25% CAGR is post FY26. Is that correct?
Yes, it's post
Yes.
FY.
Okay, these questions are from Shailaditya. The EBITDA margin of 26%, is it sustainable for the next 2-3 years?
So I think that has already been addressed that next couple of quarters, we believe the margins will remain at current levels, could be around 25-26%. But long term, we believe as the company grows, overall margins should be in the range of between 23 to 25%. It also will depend on the order mix. It will depend on economies of scale. It will depend if tomorrow there's any future M&A which happens, any acquisition which happens. It's very difficult to give very long-term guidance, but at least the current order book which we have, we believe current level of margins, which is around 25%, should be sustainable.
What is the total peak revenue from current capacity and after the capex, which we are doing currently?
Ranjit, would you want to address that?
The capex would give approximately 100 crores more revenue. That is as far as Saravli is concerned. And ME Energy
also would be another 100, 150.
Yeah. So does that answer your question or?
Yeah, I guess. Okay, we'll take the next one is from Bharat Gupta. Is there any update with respect to the order inflow from Granules India?
I guess he's talking about the hold that was placed on this order. Yeah, that hold still remains because they're still working on the pilot plant. They are doing some research on that plant, and once they are successful, then we'll get a go ahead. I expect this to happen maybe another quarter or two.
Thanks, Mr. Lala. Okay, Maitri has a couple of questions. We did mention food processing as a sector where we have received any orders or inquiries from them?
And food processing, I would say, is more relevant to Monga Stayfield, and they keep getting good orders in that field. They have got some breakthrough orders in defrosting and disinfestation. Amol, would you like to throw some light on that?
Yeah, hi, surely. So in food processing, Stayfield is focused on the meat processing industry and also in the bakery industry. and also in the agricultural industry. So these are three sort of sub verticals we have. And within that, meat processing is a breakthrough for us. We were present in the other two in smaller ways for a while, but meat processing is definitely a breakthrough. So to answer your question directly, we've had 4 recent orders, all from different parts of the world, from the US, from the Middle East, and from Southeast Asia. And they are kind of a breakthrough for us because they are in the meat processing industry. And we are hoping to build upon that momentum and enter that market in a bigger way over the coming years. Likewise, in disinfestation also, we've had an order in South America, and we have some inquiries from North America that we are working on. So these two sectors are our focus for the future growth, and we are expecting to do well in the coming years in those.
Thanks, Amol. Are there any new sectors we are entering in, Mr. Lala?
Well, we've recently, got into this ferroalloys business where we have these orders for waste heat recovery, and we're always on the lookout. So as and when we, get some successes, we will definitely keep you posted.
Question. With new opportunities in export market, are we seeing some capex initiatives to cater them?
We don't need any separate capex for it. Whatever capex has been planned is to cater to the market demand.
Veladitya has posted another question. Can you please summarize all the different capex going on or planned, along with the capex amount, asset turnover, and timeline?
So currently, the capex which is planned is at Saravli, which is around 25 crores, and this would be over a period of next 9 months, I would say. The second capex which is being planned or will be rolled out would be in end of next quarter. That will be at ME Energy. That would be in the range of 10 to 15 crores as of now. And the third one, which would probably come up only in the next financial year, would be at Munga Strayfield. They are working out the details. So as and when we have the numbers, that we'll keep you posted.
So regarding the asset turn, you can assume that the ME Energy capex of 10 to 15 crores would enable them to generate another 75 to 100 crores in terms of revenue. And regarding Kilburn, again, the 25 crore capex can generate additional 100 crores of revenue.
Samrat Shah wants to know if there are plans for acquiring any new company.
We are a listed company, so you'll appreciate if there are plans that will not be spoken about. As a management, we have done 2 acquisitions. We have integrated it well into the company, and we are open to growth opportunities both organically as well as inorganically, whether it is acquisition, whether it is joint ventures. We keep exploring it. As and when anything gets materialized, we will duly inform the investor.
Thanks, Amtashu. Okay, Naresh had a question, Naresh Murjani, which Mr. Lala has replied to. I'll just read it out. Of the current order book, what percentage is from repeat clients and what is the margin profile versus new customers? Are there any new large one-off orders that will not repeat next year? So
we
as
do
of
not
now,
Sorry.
We don't
Sorry,
give
Mr.
a margin profile breakup. Mr. Lala can give a breakup on repeat orders.
No, my answer that I mentioned was more to the gentleman who was asking about any new acquisition is on. So that's where I mentioned no.
yeah.
So as far as the repeat orders is concerned, I think a couple of these, I would not know the exact percentage, but Reliance is one of the place where we get repeat orders, not necessarily for the same product. L&T, Birla Carbon. So these are the customers which are more of repetitive in nature, but most of the orders have come from new customers. And over a period of
typically 20-25% would be repeat orders from the customer base which we have. But as the company is growing and the turnover of the company is growing, there's a lot more new customers being added. I think there was a question regarding any single large order. So typically, again, every year we've been getting 1 or 2 large orders which are over 100 crores, which are there. So in the 4,000 crore pipeline, again, there are inquiries which are quite large as well. So again, depending on which one fructifies and which one Kilburn gets, we will be able to share it.
Naresh Murjani has another question. Which segment or product category is expected to drive the next phase of growth? And what capacity or capability upgrades are required to capture it?
Well, as I mentioned that, look, based on the current inquiry pipeline, we are seeing a lot of traction in fertilizer, chemicals, some in nuclear and metal recovery. So these are 4 areas which we are seeing for next few months to come. And I don't think we need any additional technology. We are, we have whatever necessary, knowledge is concerned or technical capabilities are concerned. We have it. We don't see a challenge over there. However, I would like to mention that if there's something, which we don't have in our basket, and if we are able to, tie up with some company, we are definitely open to that. And we always on the lookout for new technologies.
So I would add to what Mr. Lala mentioned, our technology tie-up with, say, a company like Comline Sanderson of the US is one step taking forward in bringing new technology in. So this new tie-up which we've done will allow us to market their turbo dryers in India and also manufacture it. So those type of opportunities or initiatives is something which the management is on the continuous lookout. We've had a tie-up with Idrico in Italy. We've had with Comline in the US. We are in discussion with Nara in Japan for certain new dryers which they have developed. So, so this is a continuous process where any new technology or anything we believe which will help improve our offering to our customer base, we will obviously be working on that.
Thank you. Sagar Shah would like to know if we will see a positive cash flow in the second half of FY26.
Sachin, can you address that?
There won't be a positive cash flow, but definitely the negative cash flow should come down substantially. In case there are further orders where we immediately receive payments, then again it will have a different flow. But exactly we cannot project because we don't know at last quarter what will be physically dispatched.
I think this month end, this quarter end number is not important. More
Not
important is the
yeah.
continuous cash flow which is coming in into the system.
It is not reflective of the exact position because normally at a quarter end, year end, there is a higher sale, which increases the debtors position.
Andre
The
Purushottam,
very fact that our debt levels have remained the same while the company has grown from 100 crores to 500 crores this year on a standalone basis means the company is generating positive cash flows. It doesn't reflect every time in a quarter end or a half yearly end number, but a lot of our internal accruals have been used for acquisitions. It's been used for capex with combination of the money coming in from equity.
And there are warrants which are yet to be converted, which should happen partly by the end of the year and balance by the first quarter of next year. So that will also bring in the cash flow.
Andre Purushottam wants to know that for the next 2 years, what would be our estimated CAGR in employee benefit expenses?
For employee benefit expenses, you can expect, a yearly increase of around 12 to 15%. This is as far as the current employees are concerned, and as far as the new, onboarding is concerned, that could be another 5 to 10%. So overall, 15 to 18% on CAGR basis.
People would like to know that could you please give me an idea of expected sales for FY26 and FY27?
So we are expecting a revenue of around 650 crores for the current financial year at group level, and a growth of 25% on that for the next year.
A similar question had come up earlier, but I'll read this one from Makrand. Are there any inorganic expansion opportunities planned or in discussion as of now?
Well, we are always on a
We've
lookout
already
for,
addressed that.
yeah. So we are always on the lookout for any such opportunities, and anything that is complementary to our business, we'll definitely look at that. But as of now, there's nothing on the table.
Karthik has posted something. In the presentation, we find a decent increase in order intake from petrochem sector. If you can throw some light on, was it from exports or domestic market? And if it came from a client with long-standing relationship?
Yeah, it's come from the client with a long-standing relationship. That's Reliance. We had a couple of orders from them.
Naresh Murjani, what is the customer concentration? Top 5 customers as a percent of revenue? And has any customer contributed over 20%?
Well, this keeps changing from time to time. But if you look at the current financial year, I think Jessa is the one which has contributed to the top line for obvious reason that it was the biggest order of 125 crores. Yeah.
And Birla Carbon.
Sorry?
And Birla Carbon.
And Birla Carbon. But this keeps changing from quarter to quarter.
The last question on the Q&A board. Based on your current order book and project execution cycle, what level of working capital days should we expect over the coming years?
It should be around 100. That is what presently it is, over slightly over 100. Average working capital days.
We come back to the Q&A flow. Sagar, do you have a follow-up question? Your hand is raised.
No, sir. My all questions are answered, sir. Thank you.
Tejas, do you have a follow-up question?
Yes, thank you for taking that
Please.
question again.
Please go ahead.
I just want to know, are we for the future, to furnish the future orders, are we looking at any further dilutions, or is it going to be through debt and that short-term borrowing debts? And at what is the current interest rate? Are we seeing any benefits because of the stable credit ratings that we are getting or something like that?
So I don't see any further dilution required for both of the company. Regarding the current interest rate and things, Sachin can throw some light.
Currently, it is around 10.5 to 11%. So you can say 10.5.
So are we seeing any possibility of improving that, or that is what we'll be maintaining?
So definitely, it will improve with the upgrading in our rating, which we are looking at.
Okay, thank you.
Thank you, Tejas. Karthik, do you have a follow-up question?
Yeah, I think one question I posted in the chat, which was answered. Congratulations to the team for a good set of numbers. In the press release, there was a point on recent strategic tie-ups with Comlin and Nara. I think Mr. Khetan mentioned about it a little bit. If you can elaborate a little in terms of what kind of synergies are we looking at, which sectors are we targeting, access to any addressable market size that we have in mind, and what is the duration of this tie-up?
No, so Nara has been a long-standing relation. They have special technologies in the paddle dryer segment, which Kilburn has been working on with them. They are used a lot in the chemical space. Similarly, Comline Sanderson is a very well-known brand in the US. They have strong technology, which again is used in various sectors, including chemicals. And we believe that this tie-up will not only open up marketing of products here in India, which is like the turbo dryer which they had, but it will also enable us to do manufacturing for them, where they get orders for different geographies, and they will get us to manufacture it for them. So it's a two-way street where we leverage their technology and they leverage our manufacturing capacity. So it should be a win-win both ways. Time will highlight what kind of value these initiatives bring in, but these are going to be some positive steps going forward into the coming year.
Okay, sure. Thank you. That's good.
Thank you, Karthik. Friends, anyone with a question, request you to raise your hand and we'll take your question. Since there are no further questions, I'd like to hand over the webinar back to Mr. Lala for his closing remarks.
Thank you, Naveen. Well, first of all, thanks to all of you for having participated in this discussion. I can assure you that the KEL team is very much committed to the vision that we have set for ourselves for the next 3 to 4 years, including the target of 1,000 crores. And for that, we are working towards both organic and inorganic growth. We stay focused on, expanding the facilities at Sarauli and Pune. Secondly, I would like to mention that we see good traction across various verticals, which I've already mentioned, like the oil and gas, fertilizers, nuclear, and chemical. For the following year, we expect a top line growth of 25% with a 25% EBITDA margin. And if there are any developments from time to time, we'll keep you updated. That's all from my end. If any of my other colleagues would like to add, you're welcome.
I think that's great. Thank you.
Yes, thank you.
Thank you.
Thank you, Mr. Lala. Thank you, Mr. Khaitan, Mr. Vijayakar, and Mr. Munga for taking time out to interact with the investors. And we look forward to hosting you once again for the next quarterly webinar. Thank you very much and have a wonderful day, ladies and gentlemen.
Thank
Thank
you.
you.